Hi guys, welcome to my YouTube channel Insightful Investor. This particular video is first among the series of videos focused on learning the basics of fundamental analysis. In this series, we will discuss about the tools that any astute or attentive investor can put to use in order to research on a stock that can give any financial advisory firm a run for their money. So, what is fundamental analysis? Fundamental analysis is an holistic approach to study a business in detail. It helps a long-term investor to differentiate short-term noise on a stock with long-term growth potential that a business looks to create. In the Indian stock market, you will find many stocks that have created enormous wealth over the years, including the likes of Bosch India, Reliance Industries, Eicher Motors, Nestle India, to state a few. The number you see on the screen is the annual rate of return of wealth creation achieved by these companies over a period of last 10 years. Similarly, on the other side of the spectrum, you will find many stocks that have destroyed shareholders' wealth over the years, including the likes of Suzlon Energy, Reliance Power, Reliance Communication, Sterling Biotech, Satyam, to name a few. Why I am telling you this? Because long-term wealth creators have a few common attributes, and likewise the wealth destroyers also have some common characteristics. And fundamental analysis help an investor in identifying these attributes and make a distinction among the stocks. So what does it require to be a fundamental analyst? You might think. Well, it's not a big list of characteristics or skills required. It just requires some basic knowledge of financial statement. If you don't have any knowledge right now, don't worry, we'll be covering those topics in our future videos. Understanding of the business you are researching with respect to the industry that particular business is in. And some basic mathematics. So how is technical analysis different from fundamental analysis? As we have discussed before, the fundamental analysis helps the investor in taking decisions for a long-term investment. Technical analysis helps in creating short-term wealth. It supports our attempt to time the market for a better entry and exit. So when we use fundamental analysis and technical analysis together, it's called our core satellite strategy. Let me explain this with an example. We will take the example of the Amazon stock. Suppose an investor finds the Amazon stock a fundamentally strong stock and invest in that particular stock in the years 2003 or 2011. It is clearly visible that the stock made a negligible move between 2003 to 2007 and between 2011 to 2014. The real move began after 2015. This means that a fundamental analysis did not give much return between 2003 to 2007 or 2011 to 2014. Using the technical analysis during that time, the investor would be better off taking the short positions and making the money out of that particular stock. And in the long run, the fundamental analysis would help him in making a huge amount of wealth from Amazon stock during that period. Hence, the technical analysis and fundamental analysis should coexist as a part of your market strategy. Moving further, now we'll learn about the tools of fundamental analysis, which are very basic and also free. That will include the annual report of the company that are easily available on any company's website, industry related data that is easily available on any industry association website, access to the news. This helps us to stay updated with latest developments and happening both in the industry and the company you are interested in, and of course a little MS Excel. So guys, this is it from our first video of this series. Let's go through the topics of what we have learned in this video. We have learned what is fundamental analysis, the skills required to learn fundamental analysis, the difference between technical analysis and fundamental analysis, explained through an example of Amazon stock, and the tools that are required to learn the fundamental analysis. In the next video of the series, we will cover the difference between a trader, speculator, and an investor, and we'll also look how to study the annual business report of a company. So if you think you have learned something new, please like, share, and subscribe, and wait for our next video. Till then, thank you and goodbye.